Hello everyone. We have some really good presenters here. So I appreciate everyone that came up. You know, I had some really good presenters. But my name is Sheila Williams. I run an accounting firm. So this is sort of fits in because a lot of you are entrepreneurs, you have your own business, and this is a very important aspect of anybody that's running a business. So our motto is the 4 B's, better books, better business. And so I want to just get into talking about, you know, certain things when it comes to your business. The first thing is your books. A lot of people, they'll start their business, but this is the last thing that's on their mind. The only thing they think about is going out, starting their business, and making the money. And as the money come in, they spend it, you know. And then when they get to a point where they want to do that growth, that's when they start to look at it. And then they need all of these things to go get the funding, maybe from a bank or something like that. But to have your books, you know, when you first start, it helps you to move into looking at your income a lot quicker. You know, for example, if you're just bringing in that $3,000 or $5,000, a lot of times when you're small, you're spending it on things that is not a deduction, a business deduction. You know, and then a lot of times you go and to see your tax accountant, you know, and we do your taxes and it shows that you have no income. So when it comes to your books, it's very important to put that, include that in your startup. You know, have a professional help you through it because they're, you know, most of them, not all of them, they're gonna help you through it and they're gonna tell you what you're doing wrong. Because a lot of times, most people start a business based off of passion. So their passion is there. It's not here in the books. So they're gonna focus more on that, the passion part of it, and they're not gonna pay attention to the books until it's too late. So here we have a bookkeeper versus an accountant. And I wanted to speak on this because a lot of people, they go get a bookkeeper to do their stuff. And then when things go wrong, that bookkeeper don't have the answer. So for a bookkeeper, that's just someone that's like a data entry person. They know how to input your bank statements. They know how to give you some reports from a software that they're using. And that's about it. But an accountant, they understand the debits and credits of an accounting system, number one. They understand how you as the individual, the mistakes that you are making by looking at your bank account. So when they give you your financials, they're gonna give you also some input on the things that you're doing wrong or the things that you're doing right. And then also, they can help you with making good decisions for tax breaks. Because a lot of times people run their business, they make a lot of money, and the first thing they say when they come and see me, well, I want you to expense everything. Anything that you can find, just expense it. Because they don't want to pay the taxes. But then as they, you know, go on, you know, throughout their business career, they see that when they're trying to go out and get things, they can't because their tax return says, oh, we made this 6-figure, but we spent majority of it out. So we don't have any income left. And just like the young lady said about the renting, that's what she wants to do. She wants to see that you can afford, you know, renting her place. And your bank account might have a lot of money coming in, and then it's showing a lot of it coming out. These are the things where you have to stop and you have to think, you know, because I'm sure you don't want to be in the same place, 5, 10 years later. You should have a goal moving toward something. So the difference from a bookkeeper and accountant is always the price. And I've heard it so many times that people feel that paying an accountant is the last thing on their list. They don't want to do it. And then when they need to do it, they end up paying way more because they didn't do it in the beginning. So now we're going to talk about the business. A lot of people that I have seen, they start up their business. A lot of them go for the LLC. And when they come to me and they say, well, I set up this LLC, what I'm seeing is this is a choice that they are making based off of what they have seen on the internet or doing their research. And I'm here to tell you that a lot of the videos that you see about businesses, LLCs, write-off, putting things in your name or in the business name, taking them out of your name, that is half of the story. It's not the full story. And so sometimes it requires us to slow down and think because it has to make sense. If you as an individual, you're going out to buy a car or a house, they're going to do exactly what the young lady said. They're going to look to make sure that you can afford it. So if you just opened an LLC, is it likely you're going to be able to get a car in that LLC when you just, started it? No, there's so many other aspects that those videos do not give you. And they use those tools to ring you in, and then you go in and you start these LLCs. And sometimes when you start the LLC, they don't understand. I have so many people that say, well, if I have an LLC, why is my LLC on a Schedule C on my tax return? Well, because you're a single member and you're disregarded. And what does that mean? You are a sole proprietor. So now you have set yourself up to pay an annual fee to renew your business license, and you're still going to be paying double the tax because you did not get all of the information. It will not hurt you to, contact an expert. Ask the questions from an expert and pay that fee, because if you don't, then you're going to end up being out of more, than you have to be. So we have to slow down, and when we're looking at these videos, please understand that it's not the full story. It's just part of the story. And it requires you to do the research and dig in to get the other part. Another thing is, a lot of people will they will Google things and say, well, Google says, is it true that you can do this and you can do that? I'm here to tell you that the tax laws are ridiculous. It stresses me out even just thinking about it, because every year I have to do continuing education to keep my license, number one. Number two, I get PALs, books of new changes every single year, so you will not learn the tax laws. So one thing that was okay for one year does not mean that it's going to be okay for the other year. But one thing I will tell you, if you're smart and you do things the right way, you can make the $1 million that everybody is talking about, and you can have a tax-free if you're smart and you do the right things. When you have your business, what you purchase affects your profit. Now, I am guilty of this all the time. When we work, we just go out, we swipe that card, we don't even think about it. I don't know, I think the first year that I did my own business, when I seen my meals that swiping for McDonald's and stuff like that, I was like, $8,000? Like, are you kidding me? Like, look at what I could have, do with that. But we don't think about that. We just swipe that card, and we don't think about how it affects us, affects our profit line. And that's one thing that we have to do. We have to slow down, and we have to start thinking of that. And if you have a good accountant, They will give you your financials. They will show you the mistakes that you're making, and then they will tell you how to increase your profit line. And another thing you have to think about, because you guys are self-employed, you're not paying much into your Social Security and your Medicare. I have clients that was hair stylists, and now they're 60, 70 years old, and they can't get Social Security because they never really paid into it. And nobody ever taught them. They just made the money because it was cash-based. When they did their taxes, they did put a little bit on there, got their refund because they had kids, and they got the earned income credit, and that's all they were focused on. But now they're 70-something years old, and they can't get Social Security. So they get a disability of $700 a month. And no one can live off of that. So we have to start paying attention to the things that we charge. Like, I think on the banks now, all of the banks, it shows you where your money is going. A lot of us don't pay attention to it because we don't want to see it. But I would say to start paying attention to it. Business relationships are also very important because sometimes we tend to make the wrong relationships, which can hurt you in a business. Before you partnership and you do things with people, you have to find out what that person is, what their reputation is. I have children that was in the music industry, and I learned early on that if you dealt with someone in that industry, most of you guys look at it and say it's a large industry, but the people that's running it is very, very small. So if you go in with someone that has a bad or tainted relationship, then that's going to affect you too, because they're going to look at you just the same way that they looked at that person. So who you do business with, all of my clients that I've had, I have grown, but they have a deep respect for me. And I also have a deep respect for them. When they get upset with me or they're going through things, I work with them and they appreciate that. I have to be a little bit more than their accountant or their tax advisor. And I'm okay with that because I want to build good relationship. Processing power is what services are you using to take credit cards and things like that? Because if you pick the wrong company, you'll end up paying more fees out. So do your research. Look at, the different options. There's things out there. There's processing companies out there where you can make a deal where your processing fees will be very low. I tried to move into a situation where I did not use credit cards because I didn't want to pay the merchant fees, and that didn't turn out so well. So I went back and I learned how to negotiate with the companies because they want your business just as much as you need their business. So this is our information, and now I will take questions. Yes.
So when you talked about the swiping the card, right, consciously or unconsciously at times, can you elaborate how that affects the protection on the LLC? Because I know there's something called piercing the corporate veil, and I think that's what you were referring to, right?
I can't hear you.
I was wondering if you could elaborate on piercing the corporate veil.
Well,
when you make inaccurate transactions on the business side, things like that.
Well, it's like when you're an accountant and you have someone that commingles, it's so frustrating because they're wasting time going through the transactions and then trying to figure out what is business and what is personal. It is so easy I'm just going to be completely honest. If I have clients that are dancers, right, on the strip, and they make a lot of money. But a lot of times they come in, they got a 1099 for $250,000. but they can't afford to pay my bill because they are just spending and saying, oh, well, can I write off this outfit, or can I write off this because I needed this to dance? And it's like, well, when you dance, you don't have anything on. I'm not stupid, So the point is that the point is that we have to learn how to be disciplined. And you have to be, people tell you to control your temper. This is a perfect example. Control your temper. That can be very hard when someone upsets you. But if you can learn how to manage that, the same way with finances, it's hard not to swipe that card. It's very hard, but we have to learn discipline. A story that was told to me that sticks with me throughout my career is that there was a man that was hunting in the woods. He was making a stew. Bear smelled the stew. And he came over and he picked up the pot because it smelled so good he wanted it. And it burnt him, so he dropped it. But he was so angry that he picked it back up. And then he dropped it again, but he kept picking it back up. Had he realized that if he constantly picked the pan up, he was going to get burned. But he didn't know how to control the anger, so he kept doing it. And it's nothing like smelling burnt hair. So we have to learn how to find discipline. And sometimes that is very difficult, especially when you're making money and you control that money. Nobody else is controlling it. You control it. So if you're controlling the money and you're spending it, and then at the end of the year, look at how many people was put out of business when COVID hit. Because they did not prepare themselves. They had not, saved. I do a financial check on myself every year where I sit down and say, if anything, should happen, how long can I live? How many of us do that? We don't. And these are things that we have to start looking at. We have to stop swiping our card, and we have to start thinking about our futures and putting our money places that's going to help us in the end.
Awesome. Thank you very much. All right, guys, you're ready to eat. Are you guys? Who's hungry? All right. Who wants more booze? All right, guys. So the tacos are back there. So it's in the backyard.
All right, so we got about an hour or so of just networking, eating, and drinking. So enjoy it, and we'll go back to our presentations. Thank you, guys.
Oh, you have the thing? Okay.